ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com.
SPDas, we're ready whenever you are.
Okay, thank you, Igor, and welcome back to the London session, everyone. Those who are joining and would be still joining through the session. Sometimes it's amazing to see how the price action unfolds. Sometimes pip to pip matching. If you remember, 311 or 310 was the projection, and that's what in the past few hours you can see the candle is dropping down to 88, 288, and then popping up to 311 exactly. So I think I can take these two arrows off now. We have tracked those already, and those are not anymore the resistances. They have been taken out cleanly. Now the next roadmap could be we should be looking for a pullback now. Price action should ideally drop towards uh, that could be extended to this point maybe. That's the previous wave for of one lesser degree, correct? And let's see if there is an RSI divergence as well. And there you are, the RSI divergence, pretty much neat and clean. So it's like uh, back-to-back book theory. I mean, exactly according to the book. So what we have right now is a lower degree wave one in place, right from that level. We've been tracking right around Monday, 13th of June, when prices were below that resistance. So this is exactly the first wave now. Okay, maybe we can just label this as wave one now. And if that could be wave two, and something like this, three, four, and five. I'm not going to do this for all charts, but just for this one to keep track of what are we projecting and how prices are unfolding. All right. Now that's the wave theory. Once we understand, so if you have been following all these sessions, you must have understood by now that once we know how the waves are, what are the rules to plot the waves and how the waves actually unfold, then this particular game called trading, it becomes so easy, so exciting, correct? Each session, you're almost, it's like a roadmap where it's like a Google map where you're in your car and you enter the destination and it takes you right, left and right and straight and whatever. So you don't have to do anything, just simply drive and just follow it, right? So it's just like the same analogy, nothing different. All right. So we've got wave one possibly now in place, and we're looking for wave two. Ideally, wave two settles around the previous wave four of one lesser degree, and also we can match up with the Fibonacci ratios. All right. So next step could be this one. All right. So let's keep it as it is, and let's see how the price action unfolds. Now let's come to the trading point of view. The price action has now confirmed actually. It had confirmed last session as well, almost, but now it is almost a double confirmation, wave 5 also in place. So those who have traded and those who have traded for short term, it's time for them to book profits because they are all busy traders. Short term traders, they are busy traders. They would like to trade each cycle. So if you want to take some profits, then you can take profits here, and that those 100 points or whatever 50 points, 60 points can be gotten into your pockets, and then wait for the pullback. All right. So next entry would come around 245 or 250, 230 zone. This is the zone where we are looking to re-enter now. Again, please remember the stop loss will not change. 1.0100. All right, and then we can take it forward from there. All right. And if you are a positional kind of a trader, then there's nothing to be done. If you have not done any trading, and if you want to enter the bus or catch the train, then and the optimum level would be 245, 250 zone. All right. Okay, so that's the story for euro, and let's pick up the dollar index now. So it's like a routine now. I mean, look at that screen. I mean, I'm going to zoom in a bit here. We had we had done that small arrow, expecting a small low, and that's what has followed. I mean, it cannot get more precise than this. I mean, so I've closed that arrow now and cleared the path for the price action to follow. Again, possible first impulse clear. Did you remember we were talking it goes to the previous wave for a one lesser degree and possibly it goes towards the beginning of the triangle? That's what has happened. It went all the way to the beginning of the triangle wave 4. Okay, so and that's why we all keep thanking Mr. R. N. Elliott. That's what I was talking about last in the last session as well. I mean, he was the one who invented this theory. So we've got the first wave. If you want to label it, it goes like wave 1. We are going to expect wave 2 higher and then 3, 4, and 5. All right. So this is what we call keep planning your trades. Don't rush behind the markets. Let them come to you. And now, trading point of view, long-term traders need not do anything at all. Aggressive traders need not do anything at all. Long-term aggressive traders short at 110. Maybe you can bring a stop loss to to that high exactly. Because now, ideally, if you have done things correct, prices won't go to that level or should not go to that level. All right. If you want to catch the train again, that would be around the wave 2 now. Maybe you can catch it around the 38.2% or 50%. Ideally, it would be around the 61.8%. Previous wave 4 of one lesser degree, it is. If wave 1 is done correctly, I'm pretty sure that we've done with wave 1 here. Unless the third wave is extending, otherwise the first wave is done. Uh, so yes, pretty much that's a trading call actually. And short-term traders might want to take profits now around 109. Remember, we were talking about 109 as the first soft target. So that is your first soft target. Take profits here. Re-enter around 109, 60, 70. That's where we will look now. That's the second cycle now we are trying to pick up. We have almost completed. We've done the first one. All right. And now we are trying to catch the second one up there. And for the price action, for the price target of the second cycle, I would like to go and fetch it around 107.75. All right. So that's the story for the dollar index. Pound looks, I think we've already entered. We don't have to do anything right now. It's already done. I'm removing this potential buy here, and I'm also removing the past Fibonacci ratios. Let's keep it clean for now, and we are expecting price action to move like that. This is what is maybe the second wave is either the second wave, as I said, it is either going to go some side, produce some sideways action, or the third wave has already begun and it is extending in the sense that this is one of three, that is two of three, and the third of third wave is progressing. If the third of third wave is progressing, then it would be very fast from here. Doesn't look like, if it doesn't look like, and then it's going to be A, B, C, D, and E. So some more sideways action should follow. All right. So it's always the high probable and the alternate count. Okay. So pound on the long side is please the stop loss is around the 21.2 handle. We entered long somewhere here, 2160. Okay, we can go quickly to gold. It cannot get better than what we were expecting. And the next rally we were expecting around the 80s. It has managed to reach 86, but that is not a problem at all till the time. See, there are patterns. Okay, now this pattern we were expecting to unfold is a flat. A flat is a 335 structure. Normally, it did first three waves earlier. The second three waves we were expecting around 19 2686, 2680. It has just extended a bit towards 86. That is okay. The structure is still intact. Three down followed by three up. Ideally, we should be five waves lower from here. So there is absolutely no change. In fact, if you remember, we were talking in the last to last session that we would get an entry somewhere around the 80s, 81s. That's exactly, we are 5 point above that range. If I would like to extend this trend line, sometimes it goes and tests the backside of the trend line. Okay, it's not yet done, but it's possible. So 86 with a stop around 2730 and a target around 2630. Short 86, stop 2730, target 2630. That's the precise entry, stop, and exit for gold right now. We are trying to capture one more wave on the short side, and I think after that we would stop taking risk on the short side because that's 4-hour RSI right now should be around 60. Yes, it is. And by the time prices drop towards 2620, it should be around 30 somewhere. And from there, we would also like to flip ourselves from short to long. Just in case the primary minor wave 4 is complete, we would just take a chance or try and take a chance to get on the larger degree trend higher. Remember, this is the larger degree trend. That is the wave, that's the fifth wave. So if wave 4 completes a triangle pattern, then it would be a waste for us to wait or keep waiting until 25. That would not happen. It's rather good to take a chance to turn around from here, take it over to the minor wave 5 rally. I mean, it's also falling in conjunction with the US 30. See, US 30, we are expecting a rally, a couple thousand points. All right, quite a bit of silence right now. I mean, it would pick up in the New York session after a few hours, but we are expecting a rally here, a couple thousand points. All right, and that brings pressure to gold as well. That's a bit fundamental, but sometimes it's okay to try and match up. I don't do it all the time. We never practice our trades based on fundamentals or based on the analogy or the correlation, but sometimes it's good to keep a watch of what the stocks are doing and what gold could happen, gold could project probably take up. So stock rallied a couple thousand points, gold dropped 100 points, not 100 actually, 160 points, and then massive reversal for the stocks, and then massive reversal for gold on the upside as well. So it's all in falling in conjunction. With that, I just remembered the volatility index. The volatility index is inversely proportional to the stocks indices. All right, whether you talk about, I mean, it's inversely proportional to all SPX 500 stocks. So if you look at the chart here, then it is produced from December 24 until now. What it has done is it has produced what wave one, two, and three. So that could be three, four, five as well. It is very sharp actually. So the first impulse and then followed by a corrective decline. Can you see that? That's the first rally, and then you get an A, B, and C. That's a corrective decline, and the decline got over around the 786% of the rally. So if you mark it up, it's wave two, and that is sorry, wave one and wave two. If the third wave is underway, then it's wave one, wave two, and again the third wave is extending. That's again wave one and wave two. So the VIX, what I'm trying to make a point here is VIX is ready to shoot on the higher side. You see that peak came in August 2024 when the stocks really tanked. If you remember, August 24, first week, the entire stock market tanked. That was wave four, and the VIX rallied. So that's exactly that's wave one of a higher degree, wave two of a higher degree, and then now we have lower degree wave one in place, lower degree wave two in place, and the third wave is just beginning to cut loose on the north side. Maybe one more decline as the stocks rally towards wave two, and then boom. So VIX and the SP, the VIX and the indices, it's a nice way to uh, place yourselves on the trading side as well. I've been following this VIX what last 6 months or 1 year or so, not before that. So it's a good analogy to keep in mind. Uh, and we have the coins now. Okay, I'll have to just flip on the hourly. We'll have to just wait a bit more. That could be the fifth wave in the making, or it is already complete. As I said, we were talking last session as well. There could be one more high. If it's a diagonal, we've got wave one, wave two, wave three, wave four, and possibly we have one more high, wave five, before it brings prices down or retraces for pullbacks, pulls back. Sorry, but the story, as far as that is not required now, it's still a diagonal unfolding. So the story unfolding is that we are on the long side Bitcoin. If you are wanting to get at the optimum level, please do that around the 92, 93 on a pullback. Stop loss goes around 89 levels, 88 to be on the safer side, and target around 110. That's a good one. I mean, 4 hour chart looks neat. Wave one, expect wave two drop, and then wave three rally. All right, Ethereum. Ethereum is also almost on the same side, a bit more sideways action. It could be something like this, or it could come down straight away, whichever, but the path is more or less laid for another rally towards 41 and 43. Remember, please, we cannot trade without a stop loss. We should not rather trade without a stop loss. It goes around 2,800 or 900, just below that low. So the corrective wave is done, right? Most of the coins, even Solana, that is a sideways wave 4. Maybe we are going to see one more push higher. I'm going to push it higher now. On the right hand side, the projection. One more push higher, and then correction before the third wave. It's looking on track, well on track towards 280 and higher, 300. Sorry. So in that case, this wave 5 is going to be shifted to that place. Okay. See, neat little wave 1, wave 2, wave 3, all the way wave 4. It did not touch that particular orange line. So technically, that's still a wave 4, and then a wave 5 rally. That's precisely what we were looking for in the first day that we analyzed Solana. And Ripple, I think it shot up a bit higher. Yes, indeed, it shot up a bit higher. So that's an indication of the third wave in progress. So we've got, so let me just try and bring up the 4-hour chart. So from here, if it was wave 1, wave 2, and then 1, 2, and this is a third of third wave. The third of third waves are also very powerful. So the third wave is progressing, and it's progressing nicely. There's no need to panic now. It's good to remain below that low as a stop loss, 2.33, very much confirmed. But don't try to push it somewhere here or there. It is still not a perfect. There's no perfect support except 2.33 now. At least at some point in time it will pull back and then begin the rally again. At that time we'll shift it up. But all in all, we are heading towards 3.7 nicely, and with that it brings us to the end of the instruments. Let's bring it a pause here, and we'll be back again after a few hours, touch base in New York, what the price action and story has unfolded. Back to you, Ego, until then.
Thank you very much, SPDas. Always a pleasure.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com.